Hello, this is Bruce at Fleet Capital Management. Today is Friday, the fourth day of April, 2025. The market just closed, and we're going to take a look at what we're seeing in the market and also show you some of your investments because I want to continually remind you that what you see um, on your statement or on your Schwab Alliance as far as values being down may or may not be accurate based on the investments that you're in. So let me show you that. We always start by saying the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security, and you know that I'm always available for you, Bruce at Fleet Capital Management. I think it was last week that I put this quote up from Warren Buffett that said, "Tariffs are an act of war." Um, Online, when I saw that online, many of the responses were Warren Buffett doesn't know what he's talking about, which is just flabbergasting. He's just woke, whatever that means. But it's an act of war, and you're going to see that that's happening right now. I saw this today. I haven't verified it, but I suspect that it is true. Back in 1988, it says that Ronald Reagan said that when Congress passed the Smoot-Hawley Tariff Act in 1930, we were told that it would protect America from foreign competition and save jobs in this country. The same line we hear today. The actual result was the Great Depression. Um, Chairman Powell today, this is today, said that Trump's tariffs raise risks of faster inflation and slower growth. If you saw the video last week, which I hope you did, I explained to you what the term stagflation means and why it's so bad and why it's so difficult for the Federal Reserve because there really isn't a fix for it. If you haven't watched that, you might want to go back. Faster inflation, I have been saying to you for months now, tariffs raise prices. Tariffs are inflationary. And at the same time, slower growth, which is fewer people going out and spending money because of fear, fewer people going out and spending money because their 401k values are significantly, drastically, sometimes lower. That's called the wealth effect. Companies will be closing plants, companies will be laying off employees, and smaller businesses, and maybe even some larger ones, but smaller businesses mostly, will probably go out of business. So there is absolutely nothing good that comes from tariffs and a tariff war. It's a fool's game, is what it is. Today, the reason the stock market collapsed again today on the back of yesterday was because China imposed a 34% reciprocal tariff on the US goods in retaliation for Trump's trade war. This is Trump's trade war. No one else in the world is responsible for this except for Donald Trump and his minions, the folks he has around him who are giving him just unimaginably bad information. Even how they tried to calculate on their little poster what tariffs were being charged from other countries. That was completely false. It had no basis in truth. We know now how they calculated it, and it was like a 2-year-old would calculate it. It was absolutely ridiculous. CTA. I added, you may have noticed if you got a confirmation in email, that I added a significant amount to this investment that we're in. This is a managed futures strategy that has zero correlation to the US stock and bond markets. Why did I add to this today? Well, this is a weekly chart. You see that blue line? That's the 10-week moving average. Forget the other lines on here. Look at how many times the price came down to the 10-week moving average and bounced. Here it's down well, here it is. Here's the 10-week moving average and it bounced. Here's the 10-week moving average and it bounced. Here's the 10-week moving average and it bounced. Here, the 10-week moving average, and here. And this is what caused me to buy this. It's our second purchase today. Could it go lower? Yes, it could. Anything can. But below it, we have two areas. We've got one area of volume support right here. That, and we have another, which is the 20-week moving average that could act as support. So my feeling here is maybe it comes down a bit, but I think we have a lot more upside to go. This is one of the ways I'm hoping to generate positive returns in a negative environment. Okay, so that's CTA. BALT, a number of you own the ETF BALT. What I want to show you is, and I updated this just before the market closed today. It should say it on here, but maybe it doesn't. Oh, there it is. 4 at 3:22. This would be Eastern time, I believe, or maybe it's Central time since they're in Chicago. In any event, BALT is a 90-day investment. Remember, we have 87 days to go. We're protected down 20% for the quarter. And this lighter line is the S&P 500. And this line right here is BALT. Okay, didn't go down anywhere near as much, and I would never expect it to because of all of the safety built in. As of the time that I printed this, the SPY was down 9.4% from the time we went into this, which is 3 days ago. And the return is down 2.39. So you can see the disparity there. The disparity, it's complex how it works, but it's because of these options that are in here that give us that 20%. It generally doesn't allow the investment to go down anywhere near as fast as the underlying security. Hopefully that makes sense. But we got a long way to go. We could go down much further than this and still be protected. The reason this is in here is because we should have some pretty significant bounces to the upside. Doesn't mean that this bad market is over. It's just that's normal. And if we have a significant bounce, we might be able to grab the cap, which when I bought it for you, yours is actually 2.50% net of any expenses. I was able to buy this very, very well. I forced the price lower, and we got a little higher cap. Okay, so that's BALT. So even if you see it down, and it is down 2.39%, and you see that on your statement, you see that on Schwab Alliance. Are you really down 2.39%? Yeah, if you sold it today, but who's going to sell it today? This we are protected down 20%. Here's the Bitcoin. This is the 100% protected Bitcoin ETF. Bitcoin has been falling, falling, falling. It has gone very sideways for a while. I watch this every day. We could see a turn in Bitcoin, but the reality is, look at where your ETF is. It's down like 1/10%, whereas Bitcoin's down significantly. But even if you see it go down 1 or 2%, we're protected. We are protected. And if we get a rally in Bitcoin as people leave the stock market, they need to find places to put their money. Well, then we have some upside potential that we could generate there as well. But we are protected. Here is CPNQ. I bought 5% for most accounts in CPNQ the other day. This has been out since December. I bought it just recently. And look at the NASDAQ has really dropped. Now, all of these numbers are since it came out in December. But since December, the NASDAQ's down 16.5%. That's the reference asset. And CPNQ is down 1.39. Well, we just went into this. So, maybe we're down 1%, probably a little less than that. But the bottom line is we have 100% downside protection. And if the market bounces, which I suspect it will, I don't know why or when. It could be Trump drops the tariffs. It could be Republicans come to their senses and override Trump. It could be any number of things. I want us to be here and in the market and available to capture that potential upside if we can. And that potential upside for if you would have gone into it back in December, it was 8.67. The way I bought it, our upside was over 9% net. So a very attractive upside with very, very minimal downside. Make sense? Gold. Gold has been, this is a weekly chart. Gold has fallen this entire week. Here's the week right there. I'm not worried about that at all whatsoever because we were above its weekly linear regression. It kind of got ahead of itself and it'll always come back. I am not worried about gold in the slightest. Gold is a fantastic hedge against inflation, and it is a fantastic hedge against uncertainties. So I'm not worried about gold. Now, let me tell you one other thing about gold without going too deep in detail. The United States owns a tremendous amount of gold, real gold bricks. I don't know how much, but it's an enormous amount. The United States is pricing that gold at around $42 an ounce. The reality is, gold right now is around $3,000 an ounce, its actual price. If the government chooses, and this is a real possibility, it's called a repricing of gold. I believe it's happened 3 times in our history. But as things get really bad, pretty much with the stroke of a pen, Donald Trump could reprice that gold. This is just an accounting, it's just an accounting change, really. But with that repricing, if he reprices it at $3,000 an ounce, which is the legitimate real value, that could actually wipe out most of our debt. Again, it's just accounting. But what would happen to our investment if he does that? Our investment would probably double and maybe triple. So I'm not worried about gold at all. The VIX. The VIX is the fear index. And what we always say is we like to have the VIX at about 17 or below. That's great. Anywhere between 17 and 20 is considered a cautionary area. And over 20, nothing good happens over 20. Where are we today? Well, I'm going to show you exactly, but we're somewhere up here. This was COVID, so you kind of have to forget that one. Since then, this is the highest the VIX has been, and that was at 38. Okay. We are significantly higher than this now, which I think I'll just go over and show you. We're at almost 43. So, excuse me, 44. So 44 is up here. This is where the VIX is today. If we had plotted this today, it's higher than it has been in recent history. It is just lower than the COVID crisis. This is an extreme level. Now, I don't know what's going to happen next week. I don't know what's going to happen next month, but let me tell you this. In recent history, every time the VIX has gotten to a level of about 30 or above, there was a very significant bounce in market prices because the market felt like it was overdone. We're at almost 44. Don't know if this time is different. I'm just pointing out some facts to you. Okay. Here's our market matrix updated through today. We are in the red. Everything's pretty much red. We are clearly in correction territory. I'll show you this. And we are getting close, but we're not there to a bear market. I'll show you that in a moment. Our bear market avoidance indicator, which does not mean that we're in a bad market, it means avoidance. We have been warned of this for 5 weeks. That's how good this indicator is. Here's the VIX. It's been red and orange the whole time. Yesterday, it spiked. This is when the tariffs came out. It went up to just over 30. And then today, when China announced their reciprocal trade war, we jumped to just an absolutely astronomical number on the VIX. Okay. Here is the S&P 500. This is a weekly chart. This is the linear regression. Here is the blue is the 10-week moving average. The gold is the 20-week moving average. This is where it crossed. That's our bear market avoidance indicator. It's done a phenomenal job keeping us, for the most part, out of this. Just a phenomenal job. I love it. Now, I said that we are getting close to a technical bear market. On the daily chart, let me bring this over a little bit, make it a little bit easier to see. On the daily chart, you have the blue is the 20-day moving average, the gold is the 50-day moving average, the red is the 200-day moving average. You can see that the 50-day is sloping down and starting to get close. If the 50-day crosses below the 200-day, that is a technical bull market. Excuse me, a technical bear market. It's been a long day. It's been a long week. A technical bear market. We're really getting close. If I show you the NASDAQ, we're even closer to a bear market. This is just unheard of. Um, it's self-inflicted. There's only one person who is at fault. It could get much worse. I don't know if it will. It could get much worse if other countries start to retaliate as aggressively as China has, and I suspect they will. And it could cause a recession. I think that that is almost a certainty right now. It could cause stagflation. That's a real potential. That's not like a 1 in 100. That's a real potential. I would say it's 50-50. I would say it's 90% we're going to go into a recession and 50-50 we could have stagflation. Those aren't good things. Those aren't good things. You, as a client of our firm, are going to be fine. We've sent you your quarterly reports a couple days ago. For the most part, in the last month and quarter, even though the market's way down, you're either flat or up just a little bit. I have some other things I have to take care of in our allocations, which I'm waiting for appropriate times to do. Um, you're going to be fine. I'm really, really worried about the tens of millions who have 401ks. They're getting close to retirement. They don't have the guidance that you have, and they're getting crushed. They're getting crushed. And you all probably have friends who are getting crushed because they're not getting proper guidance. Trust me, I'm not blowing my own horn. That's not what I am doing. But I am saying that all of the work we've done with all these indicators are helping us. We are protecting to the downside. Will we have some downside? Yeah, absolutely. Nowhere near as much as the overall market. And will we have significant upside when we get bounces? Yes, we will. So I'm not worried about that either. Last thing I want to show you is, you see where the NASDAQ closed today? You see this faint line? That's just showing where the NASDAQ closed today. If we go back over to about here, let me move this little video thing so I can see. If we go back over to about here, that is January 29th of 2024. That's where the price of the NASDAQ was then. Got it? The beginning of 2024. Let me go to the S&P 500. Here's where the S&P 500 closed, right there. And that is February 20th of 2024. So what I'm saying is, with the stroke of a pen, Donald Trump has eliminated over a year of positive gains. He's just wiped it off the books. And that's staggering. And it's very sad for a lot of people. So I think we're doing fine. If you have questions, you must send me an email, or hop on my calendar is even better, so that, right here, just go to the website, hop on the calendar so we can do a Zoom. And like I said, I'll show you the reality of things, because you may see your account down, but because of certain investments you're in, the reality is you don't have any realized losses of that. Those could very easily snap back. But if you want to see specifically to your account, all you got to do is hop on my calendar and I will show you. I'll show you everything. We are completely and totally transparent. I'll tell you when I make mistakes. I'll tell you when I'm doing a good job, and we are protected. We've got good investments right now. So that's the story. Do your best. Have a good weekend. This will pass. This will pass. I don't know what's going to cause it to pass, but I have to imagine that the Republican Party as a whole is smart enough to know, I hope, smart enough to know that this is going to damage their chances of being reelected again, maybe for decades. That happened before. I think when the Smith-Hawley Act, the last time we did tariffs, was enacted, don't quote me on this, I'll have to look up the research, but I think Republicans didn't regain the presidency for 40 years, 50 years, something like that. Now, my point is Republicans should be smart enough to understand that history and the pain that Americans are feeling right now. I'm looking forward to them turning against the Trump administration and forcing his hand because they're the ones who have careers in politics, which I don't believe in, by the way. And their careers could be ending because of what he's doing. So hopefully there's going to be a lot of pressure from countries around the world, from his own party, maybe from the legal system. But we'll see. This will pass and we will regain an uptrend. But we are protecting to the downside now. That is our number one responsibility. Okay, that's a story. Have a good weekend. I'll be working here doing some research most of the weekend, so feel free to reach out. I'll respond. There's no problem with contacting me over the weekend. All right, talk to you soon. Bye bye.